Ever wondered where your money goes when you deposit it in a bank? Or how banks can lend out so much more than they actually have? Let's break down the real story of how banks operate, how they make money off your money, and what that means for your wallet. This isn't just about vaults and tellers. It's about how modern banking shapes the economy and your everyday life. So what is a bank really? At its core, a bank is a financial middleman. It takes deposits from people like you and uses that money to give loans to others. You earn a little interest for saving. The bank earns much more interest from lending. For example, you might earn 0.5% interest on your savings, but the bank charges 6% for a car loan. Now, let's talk about fractional reserve banking, the hidden engine of the banking system. Banks don't keep all your money in the vault, they keep just a fraction, usually around 10%. The rest, loaned out to borrowers. If you deposit $1,000, the bank might keep $100 in reserve and lend out $900. That $900 gets spent, deposited and reloaned, creating new money in the system. So how do banks make money? One way is through the interest rate spread, the difference between what they pay you and what they charge borrowers. They also earn from fees like overdrafts, ATM usage, wire transfers and account maintenance. Plus, banks use customer deposits to invest in bonds, mortgages and other financial assets. Even if your account is free, you're still helping the bank make money. Banks also issue credit cards, personal loans, mortgages and business loans. These loans help people buy homes, go to college, start businesses, but they also create debt. Buying a house with a mortgage is possible for most people only because of bank financing. Here's a tip. Always compare interest rates and terms. Small percentages make a big difference. Central banks like the Federal Reserve or Bank of England control the money supply and interest rates. They influence how easy or hard it is to borrow money. For instance, in a recession, central banks lower interest rates to encourage borrowing and spending. Remember the 2008 financial crisis? It was caused largely by risky banking practices. Banks lent money to people who couldn't repay, mainly the so-called subprime mortgage market in the US. A video which covers this in full will be at the end of this video. This resulted in a global recession and led to bailouts, regulations, and public distrust. The lesson here? The banking system isn't infallible. Always be informed. So how can you use banks wisely? Use them as tools, not traps. Look for high-interest savings accounts. Online banks often offer better rates. Avoid unnecessary fees by reading the fine print. Don't keep all your money in one place. Consider diversification and build credit wisely by using a bank-issued credit card and paying it off monthly. In conclusion, banks play a massive role in your life, whether you see it or not. Understanding how they work gives you more power, better financial decisions, and less stress. So here's the closing thought. Banks use your money to grow richer, so why shouldn't you? Learn how the system works and start using it to your advantage. Let me know your thoughts in the comments. Thanks for hanging with me. As mentioned, the video on your screen right now covers the 2008 financial crisis in full. It's packed with even more great information for you to enjoy. Click it and we'll see you on the other side.